welcome to the deep dive. Today we're going to be looking at Illumina, basically taking a deep dive into all the info you guys have sent over about this genomics giant.
Yeah, we're going to be trying to break it all down for you guys. See what Illumina is all about, how they're positioned in the industry, and, what their potential is going forward.
All right, so let's jump right in. First off, what exactly is it that Illumina don'ts?
Well, in a nutshell, Illumina is the company that develops, manufactures, and markets systems for genetic variation analysis and biological function. They're really a world leader in this genomic space.
So they're the ones making all those DNA sequencing machines we hear about all the time.
That's right. That's one of their cool products. But it goes beyond just the hardware. You see, Illumina has this whole ecosystem of products and services like microarrays, software, data analysis. They've really built a sort of one-stop shop for everything genomics.
That's pretty smart. I mean, having that kind of comprehensive offering probably gives them a real competitive advantage, right?
Oh, absolutely. And this diverse revenue stream, from instrument sales to service fees to licensing agreements, it all makes them a more resilient player in what is ultimately a very dynamic market.
Okay, so we've got a company with leading-edge technology, a strong brand, diverse revenue model. Sounds pretty good so far. But what about the people running the show? What can you tell us about Illumina's management team?
Well, that's where things get maybe a little more complex. Illumina's leadership has definitely been praised for its focus on innovation and, this ability to navigate the complexities of the world of genomics. And to be fair, they've achieved really impressive growth and market dominance.
There's a but coming, isn't there?
Well, their recent track record hasn't been completely smooth, particularly with the acquisition of Drail, a cancer detection company. This deal ended up facing a bunch of regulatory hurdles and ultimately had to be unwound, which of course resulted in a financial hit for Illumina.
Ah, yes, the Drail saga. That was all over the news. That's a pretty bold move, but maybe a bit too bold.
Possibly. It definitely raises some questions about the management team's, risk assessment and decision-making process. Was this an overreach? Did they misjudge the regulatory landscape? These are questions that investors are now kind of grappling with.
Yeah, it definitely puts a bit of a dent in what seemed like a pretty perfect picture. So with this slightly less than perfect management picture in mind, let's talk financials. What's the overall financial health of Illumina looking like these days?
Yeah, good question. It's a bit of a mixed bag, to be honest. On the one hand, Illumina does have this history of strong financial performance. They've consistently generated solid revenue growth and maintained healthy profit margins. Their cash flow is also quite robust, which gives them the flexibility to invest in research and development and pursue strategic acquisitions when they make sense.
That's all good, but I'm guessing there's a however on the horizon.
However, as you might expect, the whole G-Rail situation has taken a bit of a toll on their recent performance. Their earnings have become a bit more volatile. Their debt-to-equity ratio has increased, which isn't great. Gross margins are still healthy, but operating and net profit margins have definitely been impacted.
So some potential warning signs there. How are the analysts reacting to all this? Are they optimistic about Illumina's long-term prospects, or are they starting to panic?
Well, that's what we're going to be digging into in the next part of our deep dive. Stay tuned because things are about to get really interesting.
Don't go anywhere, folks. We'll be right back with more on Illumina, including a look at market sentiment, ownership structure, and a full SWOT analysis. Oh, and don't forget to check the description for links to all the sources we used.
This is just the beginning. We've got a lot more to cover. Buckle up and get ready for part 2 of our Illumina deep dive.
All right, so we just went through Illumina's business model and got a little peek at their financials, sort of health checkup, so to speak.
We saw some good things, right? Their market leadership, their brand recognition, their diverse revenue streams, all pretty solid.
But yet we also saw some things that might make you raise an eyebrow.
Yeah.
Like that whole G-Rail thing. And the hit to their profit margins. Not ideal.
Yeah.
So where do we go from here? What's the market saying? Are investors excited about Illumina, or are they jumping ship?
Yeah, that's the key question, isn't it? So let's look at the stock's performance lately. And, it's been a bit of a roller coaster ride, to be honest.
Roller coaster, huh?
Yeah, some ups and downs, lots of volatility. And that kind of volatility usually means investors are a bit unsure.
Unsure about what exactly?
About Illumina's future. They're not quite sure which way to go, whether to buy, sell, or just hold tight and wait and see what happens.
Makes sense. I mean, after that whole G-Rail situation, I can see why some people might be a little hesitant. What are the experts saying? The analysts, I mean? Are they giving us any clues?
Well, the analysts, their opinions are all over the place. Like, price targets are ranging from, A super low $100 to a super high $254, with the average being around $165.
Wow, that's a pretty big difference. So some analysts think Illumina is going to bounce back, and others think they're headed for a downfall.
Pretty much. The consensus rating is moderate buy, which basically means they're cautiously optimistic, acknowledging the challenges but still seeing some potential for growth over the long term.
Okay, so the analysts aren't really giving us a clear answer one way or the other. What about short interest? Are there a lot of people betting against Illumina?
Yeah, actually, short interest has been going up lately, which means some investors are expecting the stock price to drop even more. Essentially, they're betting on Illumina to fail.
Not exactly a good sign, but it's not the whole story, right? We should also look at who owns Illumina's stock, like the ownership structure. That could tell us something, right?
Absolutely. Knowing who the big players are is always helpful. In this case, it's mostly institutional investors, the big names, BlackRock, Vanguard, those types.
So the big institutions, they hold a lot of sway. What are they thinking? Are they buying more Illumina stock, or are they selling?
Well, that's the thing. The average amount of Illumina stock in these institutional portfolios is actually pretty low, under 0.3%, which could mean they're not 100% convinced about Illumina's future. They're keeping their options open, just in case.
Interesting. They're playing it safe, huh? What about the people who know Illumina best? The insiders. Are they buying or selling?
There's been a little of both, actually. Some executives have been buying stock, but some have been selling too. Of course, there would be all sorts of reasons for that. But some people might see the insider selling as a lack of confidence,
Yeah, insider selling can definitely raise some red flags.
Yeah.
So what's the big picture here when it comes to Illumina's ownership? What's the key takeaway?
I think the key takeaway is that ownership is pretty concentrated, with institutions holding most of the shares. Which means, of course, they have a big say in what happens with the company.
Right, like their decisions could affect everything. Leaderships, strategy, even things like dividends. So even if the market sentiment is a little shaky right now, those big investors could turn things around.
Exactly. It's definitely something to watch. So before we move on, let's do our risk assessment, shall we? A classic SWOT analysis to see where Illumina stands. Strengths, weaknesses, opportunities, threats, the whole shebang.
Love a good SWOT analysis. Lay it on me. What are Illumina's core strengths? What are they doing right?
Well, they're the leader in next-generation sequencing tech, no doubt about it. And their brand, it stands for quality, for innovation, and they've got tons of customers already using their stuff.
Yeah, and those high switching costs we talked about, they make it hard for competitors to steal Illumina's customers. Once you're in the Illumina ecosystem, it's hard to leave.
For sure. But even the giants, they have weaknesses. One big one is that Illumina relies on what's called short-read sequencing technology. It's been super successful, but there's this new tech coming up, long-read sequencing. And that could be a problem for Illumina down the line.
Ah, makes sense. Technology's always changing, right?
Yeah.
So what other weaknesses do we need to be aware of?
Honestly. The whole Jerail situation, it's not great for their image. It makes people question their judgment, their strategy. And then there's the pricing pressure and the drop in instrument sales. Those are real issues they need to address.
Yeah, definitely some vulnerabilities, but where there are challenges, there are also opportunities, right?
Yeah.
What are the bright spots for Illumina?
Oh, tons. The genomics market is growing like crazy. Personalized medicine, it's becoming the norm. Illumina is in the perfect position to take advantage of all that.
They're like at the front of the line for this healthcare revolution.
Yeah.
So what specifically could they do to seize these opportunities?
Well, they're already moving into new areas, like multi-omics, where you analyze different types of biological data, DNA, RNA, proteins. It gives you a more complete picture of health and disease. And they're also offering more services like data analysis and interpretation, helping researchers and doctors make sense of all this genomic data.
So they're not just giving you the tools, they're teaching you how to use them. They're becoming a true one-stop shop.
Exactly. But it wouldn't be a real SWOT analysis without talking about the threats. Competition is heating up, not just from those long-read sequencing companies, but also from other disruptors out there.
And then there's always politics and regulations. You never know what's going to happen there. Illumina needs to be ready for anything. What are some of the specific threats they need to watch out for?
I'd say the biggest one is the rise of new sequencing technologies that might be cheaper, faster, or more accurate than Illumina's current stuff. They can't just sit back and relax. They have to keep innovating, keep adapting.
Complacency is the enemy, right?
What else? Increased regulation in genomics. As we use more and more genomic data, governments are going to start asking questions about privacy and ethics. Illumina needs to be very careful here, make sure they're doing things ethically and responsibly. If not, their reputation could take a hit, and that could affect their growth.
Yeah, reputation is everything these days. So big picture, Illumina is at a crossroads. Lots of potential, but also some real obstacles in their path.
It's going to be super interesting to see what they do next. Will they pull themselves together and stay on top? Or will these challenges prove to be too much?
Will they stick with short-read sequencing, or will they jump into the long-read world? Maybe acquisitions, partnerships, who knows? Or maybe they'll do a little bit of both.
The million-dollar question, right? And that's exactly what we'll be exploring in the final part of our deep dive.
All right, so we spent this whole episode really digging into Illumina, this genomics giant that's facing some, I guess you could say some big opportunities, but also some pretty tough challenges.
Yeah, we talked about their dominance in the DNA sequencing world, their business model, how their financials have been kind of all over the place lately, and what the market's saying about them.
So after all this, all this analysis, what's the bottom line for our listeners? What should they take away from this whole deep dive?
Well, I think Illumina is a perfect example of a company trying to stay on top in an industry that's constantly changing. I mean, they built this empire on short-read sequencing, but now long-read tech is coming in and shaking things up.
And then there's that whole Girail thing. A bold move, sure, but it didn't really work out. And it kind of makes you wonder about their strategy, their ability to deal with regulations and all that.
But even with all that, Illumina still has a lot going for it. They've got a history of innovation, a loyal customer base, and they're all over the world. That's hard to beat.
Right, but they can't just sit back and relax. They got to address those pricing pressures, get those instrument sales back up, and most importantly, show that they can adapt as the genomics landscape changes.
Exactly. Investors want to see that Illumina has a plan for the future, a plan that includes new technologies and addresses what the market needs.
It's like they're at a fork in the road. One path leads to, continued success. The other leads to, well, not so much success. The decisions they make in the next few months, the next few years, are going to determine which path they end up taking.
And that's what makes Illumina so interesting to watch. Will they stick with short-read sequencing and try to make the most of it? Will they jump headfirst into long-read tech, maybe through acquisitions or partnerships? Who knows?
Or maybe they'll find a way to do both. Hold on to their short-read market while also branching out into new stuff. It's a tough balancing act.
It really is. And that's why this is a story worth following. The genomics world is changing so fast, and Illumina is right in the middle of it all.
So if you're interested in genomics, in the future of healthcare, or just in seeing how a big company handles disruption, keep an eye on Illumina. This story is far from over.
And remember, you can find all the sources we use for this deep dive in the description down below.
Plus, we've got some stock suggestions that you might want to check out. Those are in the comments section.
This deep dive is just a starting point, though. Do your own research, talk to a financial advisor, and make smart investment decisions. Oh, and keep in mind, the info we shared today is accurate as of February 3, 2025. But things change quickly in the genomics world.
So stay tuned for more updates and analysis. And don't forget to subscribe to the Stock Analytics AI YouTube channel for more deep dives into the companies shaping our world.
We use the power of AI to bring you the most comprehensive analysis out there. Hit that subscribe button and join us on this journey. Until next time, keep learning.